Well, unlike last week, there is not a lot moving the markets this week. However, we do see a little bit of good movement today, so we're going to talk about it. So let's dive right in and see what's moving the markets. National average, 30-year fixed rate loan according to Mortgage News Daily, 6.17% today. Y'all, that's barely changed from a week ago. We were at 6.16 a week ago. We were at 6.19 30 days ago. Now, reminder that we haven't had a dead flat month here interest rate wise. Although the last week or so has been, we were at 6.01 on the 12th, y'all. So that was a 4-year low in interest rates. Got the phone ringing some and then immediately got pulled away, as we discussed on our video last week. Here's what's moving the rates today, and we are poised to see a better open tomorrow than we got today, y'all. We saw rates a little bit higher today than yesterday. However, we've seen a nice rally in the bond market today based on some weak ADP data, some jobs numbers showing significant weakness in the jobs market and significant downward revisions to the 2025 total of jobs created. Y'all, we may see even future revisions downward for what the market did in 2025. The numbers that we get from the BLS, Bureau of Labor Statistics, that were otherwise due tomorrow are being delayed due to the shutdown. So this ADP report is carrying some outweighed impact on the markets, and that's why we're seeing a strong rally based on those weaker than expected results this morning. Let's look at what it means for the Dow Jones and for equities. We don't normally talk about this, y'all, but it's one of the reasons we're seeing such a nice rally in the bond market today is weakness on Wall Street. So the Dow Jones is down 1.1% so far today. The S&P is down 1.2%, and the Nasdaq's down almost 1.5% today. So a lot of money moving out of equities and into fixed incomes on the weakness of that labor report. So you would be, pretty smart to think that we would see greater odds of a Fed cut at either their March, April, or July meeting. Here's where those totals are. We've seen a little bit of movement, y'all. Not so much on the March 18th meeting. There is still only a 23% chance of a cut under the Powell Fed at that meeting. But now there's a 41% chance at the April 29th meeting. That's up a little bit, y'all. So the likelihood of a cut still not above 50% at that 429 meeting. I would be very surprised if we see a cut under Chairman Powell. Again, we discussed that last week. But there's now a 79% chance of a cut at the July 17th meeting. Now that's going to be the first meeting chaired by our new chairman, Chairman Warsh. So it's going to be interesting to see how this plays out. Does Chairman Powell want to get in a cut at the April meeting just to show that he is in fact independent and not isn't going to just stay fixed in his view that this presidency is not going to get a cut under him? In other words, is he going to put his money where his mouth is on being independent and maybe move towards a needed cut at the April meeting? Well, we'll wait and see, y'all. As we get closer to it, you'll see Fed futures start pricing that in. The bond market will start pricing it in as well. In any event, y'all, it looks like we are going to see moderating rates early to late spring. That's going to be a good thing as we're entering the heat of the housing season. So looking forward to that, hoping for it, praying for it, hope we see it, hope borrowers can get some good discounts going into that time frame. Again, keep in mind though, y'all, that when we see interest rates tick down, especially if we get anything with a 5 in front of it for a 30-year fixed rate conforming conventional loan on that national average, when that starts hitting the news, you're going to have a lot of buyers that are on the fence today hitting the marketplace. And that may deprive you the opportunity to get the house that you truly want. And you might be in a bidding war once you find houses that are your second, third, or fourth choice. And you wind up paying more for it as a result. So that little bit of payment savings that you might have had on interest rates goes away quickly, either in loss of the house that you really, really are wanting, or just the fact that you're going to pay more for it when you find it with the competitive bids you're going to have to submit. So something to keep in mind, y'all. Refinances are a thing. I know I sound like a broken record on that. There's a lot of merit in buying it now while it's slow, and this is a slow month, y'all. And then refinancing it down the road if rates improve. Always blessed to have your referrals. Thank you so much. Very excited about this year, y'all. I think we're going to have a much stronger year this year than we did last. In any event, hope to be a partner with you in all of it. Looking forward to that. Stay blessed, stay safe. We'll talk to you next week.